we are having one market structure like this. And as our standards, here is a weak zone, right? The red zone right over here is down key level on 50-minute time frame. And why the weak key level like this still can hold price going down very strongly on the right side right over here, right? So we will focus to understand what is going on the markets at this time. When you try to explain the markets like this, based on price action, based on our standards, you will understand the real story behind the markets very detailed, and which means you understand markets language. And during trading, you can give out the trading plan very confidently because you understand what is really going on, not only trading pattern, not only market structure pattern, right? Understanding like a machine. It just can help you trade profitable. But if you want to trade and achieve consistency, profitable level in the long term, you need to understand what is going on behind price completely. First of all, we need to check again whether the market structure right over here is correctly or not. Because if the trader defines wrong market structure, there are no meaning, right? And at this time, you can see right over here, the trader point out for us, here is a valid pullback. I mean the pullback, the up case right over here. I will zoom in just a little bit, right? At this time, here is a valid pullback as our standards when we can see series of the up candle like this. And before that, we can see series of the down candle right over here already create a valid breakout pattern, right? And this pattern, some candle right over here can break out anything on the left. Anything means it can break out recent high, recent low, the range, the key level, the PY zone on the left side. Therefore, we already have a valid pull right over here. We don't need to check everything on the left side carefully. We just focus on the key place on the markets. That is the NCI rules. We just focus to analyze the key zone, the key place to understand the key story. And at this time, here is valid pullback. Therefore, we will have one market structure like this, right? Pull way, the first pull way here, and here is a pullback way. I will not marking the number like this. After that, the market pullback very strongly right over here. You can see series of the up candle right over here. Therefore, here is a valid pullback also. But at this time, what we can see here is a recent low, and here is a pull way of the market. At this time, there are gaps right over here, and for the gaps, we will assume the gaps as a downward candle like this. And for this case, we cannot make sure here is a valid breakout recent low pattern because after the Maruzu candle right over here, that is an up candle one more time, right? Therefore, this time, we need to check again as our standards a very big Maruzu candle like this. And then one up Maruzu candle right over here. But when we compare as our standards, this one is very small compared with as a big Maruzu candle right over here. Therefore, this Maruzu candle is actually a doji candle only, right? We focus to reading and distinguish whether here is Maruzu candle, bean bar, or doji based on the real story on the market. We compare the candle to candle. We don't only use to compare the body with the total length, right? For example, as our standards, doji mean the body is less than 30% total length, which means the total length from high to the low here, and the body is from close to the open right over here, when the distance from close to open is less than 30% to high to the low, which means that is a doji. But during analyze the markets, you need to understand the real price action, the real power behind the price, right? For example, like this case, the biggest candle we can see on the markets is assumption Maruzu right over here, right? We are having the gaps and we assume the gaps as a Maruzu candle, and that is the biggest Maruzu candle on the left side right over here. And when we see a up candle like this, we need to compare the up candle right over here with the big candles, and we see that this up candle is very small compared as the Maruzu candle right over here. Therefore, this time, This one is a bullish candle and this one is just a doji candle on our market right now, right? Therefore, two candles right over here maybe create a valid breakout pattern, but at this time, we need to confirm one more time. The bullish candle right over here having just a little power below the recent low right over here, which means here is not valid as our standards. As our standards, we need to see more than 30% body of the bullish candle right over here below the recent low, right? But this time the power is not enough. And after that, we don't see any production confirmation. For some trader who has not mastered market structure, this one may be confused because market structure is very advanced to the new trader. That's the reason why I made 18-hour course to explain market structure. You can see on description of this video. And at this time, here is still a range of the markets, have no any valid breakout right over here, and I will zoom out just a little bit slowly and you will see the story easier. At this time, trader already marked here, I mean the point right over here is valid breakout. But actually this one is not valid because you can see right over here the second candle is pretty big compared as a down bullish candle right over here. Therefore here is a fake breakout also, which means when we zoom in the chart to see the whole story, at this time everything right over here is just a range. Therefore this time we don't care about the valid pullback right over here because we don't have a valid pull sway on the right side. Therefore this time the market structure, the final market structure at this time will be like this. We will drag the pull sway until here, right? And then we will find the highest high of the range right over here to drag the pullback way until it, which means at this time we will have final market structure like this. And the trader here already defined market structure very exactly, right? And at this time, we are having the key level right over here. If trader can define the market structure like this on the chart, which means the trader come to master level of market structure, and trader at this time just need to focus on the trading strategies, risk management and psychology control a little bit, you will trade very well. And at this time, why the weak key level right over here can hold the price and the markets can move down very strongly on the right side right over here. Even we can see the buying pressure come into the zone very strongly. Here is a weak zone. Weak zone means there are no more the selling pressure are waiting to sell at the zone right over here, right? Why we can know that? For example, we are come to the market just at this time, which means we don't have data on the right side, right? And at this time, we will judge power of the zone based on the base right over here. We can see the markets pullback going down and come higher, which means the pressure right over here is not really clearly. Therefore, here is a weak zone as our FIC standards, right? There are no more sellers are waiting to sell at this time. Meanwhile, we can see the buying pressure come into the zone right over here. I would need something right over here to explain to you more clearly. You can see here, we are having very big bullish candle. Right? We even can see the gaps. The gaps are over here, create the imbalance on the market. And if you use NCI indicators, our indicator will mark the imbalance for you by different colors, and you will realize the power of the market easier, right? And at this time, you can see that when we have a gaps, which means strong buying pressure coming to the market, right? And we are having the weak selling pressure here, buying pressure very strong. At this time, why the key level right over here still can push markets move down like this, right? At this time, if you are just new trader, the trading condition right over here, I recommend to you to skip trading here because that is very hard. But if you are experienced trader, you can understand the production here. You can trade here very well, right? And at this time, first of all, when we see the buying pressure very strongly like this, but the imbalance right over here is filled. I mean filled, F-I-L-L. And why I can know the imbalance is filled? You can see here when the imbalance is gray, we are having one pullback come into the imbalance. At that time, imbalance is filled, which means buying pressure is absorbed, right? And at this time, we also have one imbalance right over here, but the market slowly come down to absorb the buying pressure right over here, right? And then the markets come higher to form a triple bottom, triple top at the key level right over here to confirm to us selling pressure this time is still strong and still can absorb the buying pressure on the way right over here. And when we can see the strong selling pressure at the zone, we can be confident to entry, right? But what is the story behind the way right over here? First of all, buyer try to push markets come to break the weak zone right over here because they can realize here is a weak zone and they can change the chain of the markets very easily. Just a little power, they can break the down key level to change into the uptrend. Therefore, they push a lot of money, put up lots of buying pressure at the beginning right over here and come to over here. But during they are pushing the markets move higher with a lot of money, create the gaps on the markets like this and like this. They also realize sellers still join the markets to fill the imbalance right over here by the way right here, and they also try to fill the imbalance right over here by the down way right here, which means at this time that is not a good chance to change the current trends of the market, right? When we see the selling pressure is still strong, buyer will exit. I mean that they don't join into the markets anymore because they realize they cannot change the trend at their expectation anymore. Therefore, when the markets move higher and move higher, the buying pressure already weaker and weaker. Why we can realize that? Because you can see here, big Maru's candle is really crazy buying pressure. But when it's come higher right over here, you can see the Maru's candle is smaller and smaller, right? Here we are having big gaps. Here we also having big gaps, right? I will delete and mark it again. One big gap here, one big gap here. But these gaps, this imbalance is created by a single candle right over here. Meanwhile, the gaps right over here is created by two Maru's candle. And when we compare total length of the Maru's candle, you can see the Maru's candle here is really big. Meanwhile, the Maru's candle right over here is smaller a lot, which means here is very same as mopping pattern. As a level 1 course, I will explain to you. Mopping pattern means when the markets move higher and the size of the candle is smaller and smaller like this, right? Which means that when the markets move higher, there are no buyer join into the markets and seller try to join into the markets to brush the candle smaller like this. And finally, when we can see a down candle very strongly come into the markets, which already confirmed to us, buyer right over here is really active and seller really joins the markets, and at this time we can come to sell in the markets, and here is very strong confirmation pattern on level 1 I will explain to you. And at this time on the chart right over here, the pattern is not clearly by single candles, but it is clearly by the way like this. You need to realize and understand the story right over here, right? Which means we are having the mopping pattern like this, and we are having the downway strongly right over here, which confirm to us here is strong zone in the market still, right? Because we read it by the real power behind. And the signal for the weak zone as FIC standard right over here is clear, which means that here is still strong zone, not the weak zone anymore, right? And at this time, some trader also realize here is a weak zone, still having the selling pressure, and they maybe still wait to sell at the zone right over here, but they still worry about the market because there are gaps right over here, and the gaps appear on the market makes the chart be more noise. Everything is not clearly on the left side right over here, right? Therefore, this time they will wait for a stronger confirmation on the market, and stronger confirmation at this time is a triple top. You can see the top on the market right over here, and we even have 4 and 5 top at this time, right? When this pattern appears on the markets, which means that buyers try to push markets moving higher, but sellers still enjoy very consistency at the same price right over here. You can see right over here, they enjoy consistency at the same price level, right? Therefore, at this time, when the seller come into the markets very strongly like this, buyers already realize they are loser. They have failed to change the trend in the markets. They will exit. And when the buyer exits completely on the markets, seller will push markets easier and move stronger like this in the market. That is the real price action behind price. There are 2 places to enter here. First of all, you can see the pattern right over here. Enter at the middle price, right? And maybe you missed to enter here, you can wait for a big merge candle and continue enter at the middle price. And that is a total thing I want to tell you, and I want to use this example to explain to you the market structure, the market picture on the market right over here. I hope you understand my explanation well, because this lesson is important for the trader. Have a nice day. Thank you for listening to me. See you on next video.